Hey everybody, in this video I'm going to be going over three different situations on low, medium, and high dividend yields and dividend growth rates over long periods of time, 20 years, and see what the results are. Okay, all these strategies could be valuable for investors in the long run, and I'll show you the numbers why. Let's get to it. All right, guys, I'm going to go over two different resources and websites to use for looking at past performance and also possible ideas for stock picking. One is portfoliovisualizer.com. Again, all the links will be down below, so I'll show you all the data. And this one, you could actually put in previous stocks. So we're going to back test portfolio asset allocations. You pick the starting and ending year. You put initial amounts. You put in additional cash flows if you're reinvesting or dollar cost averaging every year. Rebalancing, that's if you have many stocks. Reinvest dividends. I'm going to do yes for this one because I want to show the power of reinvesting dividends into more shares of your company. I'll probably do a future video on if you don't rebalance, how much lower it gets. And the following. We're going to be looking at three different stocks today. So we're going to test three different stocks and ETFs and see the past performance and how it would actually occur now. That doesn't necessarily mean these will be as good in the future, but it's some gauge to look at for stocks that might be very valuable to have. We're going to go from the year 2000 all the way to 2020, so a 20-year time horizon, and that counts the downturn in the last few months as well. We're going to look at Realty Income, one of my main holdings. They have a pretty high dividend yield, but medium growth rate. So the dividend does grow pretty steadily, but not at a very high rate. Second one we're going to look at is Johnson & Johnson. They're kind of middle of the pack in dividends, and they have middle of growth rate. Very big company. Last one we're going to look at is Verizon. They have a pretty high dividend yield because they're doing phones and telecommunications, but the growth rate is a little bit lower than the other two. Okay. First is Realty Income. If you start with $10,000 in Realty Income from year 2000 to 2020, you start with $10,000 and your final balance was $186,490. You 18x'd your money in 20 years. Really good past performance. Here's a portfolio growth. Again, starts with 10,000 here in year 2000. Few little blips, but not much. 2008 actually decreased very slightly, even though a lot of real estate investment trust REITs went down a lot. Another blip here in the last few months. But in the long scheme of things, it doesn't really change much. Here's the annual returns. In general, very good. Only 4 down years in 20 years. And this is the biggest down year so far. That's why I bought pretty heavily when it was near the low this year. Here's the portfolio income. Again, pretty high current yields and pretty low growth rate. See how the dividend income constantly increases. 2020 is not done yet. That's why I didn't show it. Here we are in Seeking Alpha, looking at the dividend history. Very steady increases. It's called the monthly dividend company for a reason, because they pay monthly and they constantly increase their dividends. Dividend growth, we'll look at the last 1, 3, 5 years, 10 years even. Relatively lower in the growth rates, 3, 4, 4, and 4. 10-year growth rate, if you're looking for high-yielding dividend growth companies, it's not a big growth company, but the yield is relatively high because real estate investment trusts have to give out at least 80% of their earnings in dividends. Currently, the dividend is 4.59%. The dividend in the last 20 years have ranged from 3 to about 7% throughout. Okay, so Realty Income, very good pick. Now we'll look at Johnson & Johnson. And same data, $10,000, 2020. $10,000 turned into $50,789. So you did 5 times your money with this company. Portfolio growth, not as steep as Realty was. As you'll see, they have a lower dividend yield, but the growth rate's a little bit higher. Annual returns, they had a few more negative years compared to Realty. But 1, 2, 3, 4, 5, 6 out of 20 years are negative. And the negatives aren't that dramatically negative, while they have some pretty high positive years as well. Portfolio income, pretty steady increases. This should be good motivation to keep dividend growth companies because over many periods of time, your income will steadily increase. Again, don't follow 2020 yet because that year didn't finish, but you can see a very steady incline of your dividend income. Here's Johnson & Johnson. Dividend yield right now is 2.88%, so it's a lower starting yield than Realty Income. The dividend growth, though, is a little bit higher than Realty Income was in the last 10 years, looking at about 6% to 7% the last 10 years. So another good pick. You can see their dividends has been steadily increasing too. So just imagine if you bought into year 2000, you're getting 70 cents per share. Currently, you're getting $3.75. The growth rate is higher than Realty Income was. So you could actually possibly make more dividend income over long periods of time in a higher growth company. Now, last one we'll look at is Verizon. They have a pretty high dividend yield, but lower growth than Realty Income was. Ticket symbol VZ, same date as before, 2020. Initial balance is $10,000, final balance is only $25,000. So you did 2.5 times your money, but for 20 years, not really the best. There were some bigger blips in stock price. They had some pretty big negative years in the beginning, so you started off lower and took a little longer to rebound. However, portfolio income, again, steadily increasing. They've been increasing their dividends over time, but they had a higher starting yield. Current yield on Verizon is 4.5%. Dividend growth in the 1, 3, and 5 and 10 years is lower than the others, 2, 2, 2, and 3.5. Okay. So how do you find different companies? You go to a dividend screener. A good one I found is marketbeat.com/dividend/screener. And all the links are in the description down below. What you could do here is you could put in different numbers of dividend yield. Payout ratio is how much money the company is paying back into dividends. If that percent is very high, then they might be overpaying their dividends. So I kept it at less than 75%. Ideally, you're around 50, 75% or so. And then average dividend growth, I put over 10%. So I'm looking at relatively decent yields and big growth companies. And this is what we got. Verizon's near the top of the list. Merck, Exxon, Pfizer, Bristol Myers Squibb, IBM. Pretty steady players that are long-term dividend growers. Now, if we change this, let's do the yield a little bit lower. Let's actually do the yield a little bit higher, 5%, but lower growth rate. Could also look at the higher starting yields if you want to start with good income at first, but again, they won't grow as much. Different banks here, cruise lines, energy companies, and so on, right? What I would recommend you guys do is to go to Seeking Alpha and do a possible watch list of stocks that you might be interested in. If you see that their company increased their dividend or starting with a high yield at first, those are different options that you can look at and possibly buy when you're ready. So here's my possible buy list. I have 19 of them. Too many different companies. If you click on dividend tab, you'll see the current dividend yields. AT&T is one I'm looking closely at because it's a 7% yield. The growth rate you could also look at when you're over here. So AT&T, like Verizon, high starting yield, low growth rates. 3M is pretty much the opposite. Their yield's a little bit lower, a little under 4%. Their growth rate, 9, 10%. So over many, many years, 3M might actually be paying a higher dividend than AT&T. All right, so if you have any questions, if you want me to analyze any particular stocks you're looking at for the yield and growth rate, leave a comment down below. Shoot me a message, like, subscribe, all that good stuff. Be safe out there, and I'll talk to you guys next time.